why gold's next big move could be lower. Guys, something really interesting has happened this week with the Fed. So for the first time since March, since before all this coronavirus stuff really started to kick off properly, the Fed's balance sheet has shrunk. So the Fed's balance sheet is basically the amount of money that it has created out of thin air and pumped into the economy via QE, via repo operations, via dollar swap lines, which they do with other central banks. Now, the reason for the Fed's balance sheet shrinking this week is because of those dollar swap lines. So you'll remember back in mid-March, there was this dollar liquidity crunch. Investors all over the world and banks just could not get hold of dollars. The value of the dollar shot through the roof, as you'll all remember. So the Fed did this thing where they would literally offer dollar funding to other central banks really cheaply. So those banks could then pass those dollars on to their, those other central banks could pass those dollars onto their, domestic banks, asset managers, all those people that needed those dollars. But the take-up of these dollar swap lines this week by all those other foreign central banks has been very low. And a lot of these dollars that were borrowed back then have actually been paid back. So net, the Fed's balance sheet has actually shrunk. So it's almost like monetary tightening when you shrink the balance sheet. So basically the dollar liquidity market, instead of being flooded, that flood of dollar liquidity is actually coming back a little bit. Why do I talk about this in the context of gold? Well, let's talk about gold's price action since the start of the coronavirus crisis. You had that big dollar funding squeeze, which meant that people were selling everything. They were selling risk assets, but they were also selling traditional havens like bonds, like JPY, like gold. So gold got slammed below 1500. But then all these central banks stepped in, like the Fed, led by the Fed, with all the QE and the dollar swap lines that I was just talking about, and that pumped gold up because gold loves central bank stimulus. Pumped gold up above 1700. But to be honest, for the last 2 months, gold hasn't really been able to advance. And it's because there's conflicting forces working on gold. So there's all supporting gold, there's all that central bank stimulus. There's also some, residual risks like coronavirus still going on, geopolitical things, US-China tensions. But pushing gold down has been risk appetite in the market. You've seen stocks going up. You've seen crude oil markets recovering really well. AUD, NZD all doing quite well over the last 2 months. So that's kept a lid on gold. Whilst the central bank stimulus has kept a floor beneath it. But guys, if dollar liquidity conditions start to, tighten again, that floor, all that dollar stimulus, all that central bank stimulus that gold loves, that floor might be taken away a little bit, which might mean that if risk assets continue to push higher, gold might be hit. Big resistance at the 1670 level, that's the June and the May lows. If gold does break that amid a tightening in the Fed's balance sheet, we could see a big move lower in gold. Obviously, this is all speculation, guys. We'll see what happens. You never know what's going to happen in markets. You just got to trade things as they come. But just something to think about. That is pretty much it from me for now, and I'll see you in the next one.